A little bit about myself, Sean Dalfen, CEO of Dalfen Industrial. We are one of the nation's largest privately held owners of industrial. We have 9 offices throughout the country, over 55 million feet under management. And we focus on last mile industrial. And so that's industrial in key metro areas within city centers closest to the population and workforce. The trends in commercial real estate don't all apply to every property type. The benefit of what we do is we're buying properties that are in close proximity to the actual people who are receiving things from, people delivering in e-commerce, or in close proximity to that workforce who has to work at the facilities. So the proximity of the real estate versus the trends, say from a technological standpoint, are less impactful when in your supply chain, the greatest cost is the movement of goods or your employment. And so people will trade, or companies will trade, certain technological advances in buildings in order to be close to those end users. To expand on that a little bit, the trends in commercial real estate as they relate to our space, and we're an expert in simply one area. We're not masters of everything. And I think the trends are, you want the building with the most flexibility, the newest possible property that can lend itself to a myriad of different uses for modern users. And so in our space, if you have lower ceiling heights, which can prevent from the efficient racking of product, and you can store less in the buildings, to inefficient truck courts, loading doors, all that kind of stuff, that can impact the tenant's ability to deliver their goods. And those are the things that we focus on. What the tenant puts in your premises, whether it be laser-guided machinery, automated equipment, et cetera, that's on the tenant. So in our space, we look to provide the most modern and effective structure for a tenant to do whatever technology is telling them to do. I'll just look at our asset class because that's what we focus on. Some of the bigger challenges, I think, are going to be from the movement of capital flow. And the reason for that is because you have a lot of individuals and institutions that have invested in our asset class at what was perceived as peak periods, meaning 2021, 2022. Those were years where you still had really low interest rates, and there were assumptions that rental rates would continue to grow at the same pace they were growing before. And so it's going to be a problem for them to get out of those properties, because they believe, I think justifiably so, that over time those assets will produce decent profitability, but it will take time. And so if you're not returning money back to those investors, the problem is those investors don't necessarily have that money to put back in the system. That's one issue. Another issue is there was an oversupply of product. And so in order for the supply and demand fundamentals to become in balance, you have to absorb that product. And so that takes time. And then when you have geopolitical shifts and certain issues on that front, it can create an environment that is difficult for big companies to make decisions. Whether it be 10% tariffs, 20% tariffs, whatever the tariff rate or the change rate that is decided, as long as the rules of the game are clear, companies and institutions will be able to adapt to them. But if you're dealing with a changing landscape on a regular basis, it's very difficult to make expensive and important decisions, because you have to have the faith that those decisions will be right and not a new set of circumstances being introduced tomorrow. And so I think the biggest risk, to sum it up, in our space is coming down to mostly, if there's a lack of certainty, there'll be a lack of movement on both the capital front and the tenant front. And those are critical to the success of our business. Well, what we see the biggest opportunity is exactly how I answered the last question, which is the uncertainty. We've thrived in uncertainty throughout our existence as a business, and we've generated some exceptional returns for our partners. The reason being is because we took what was, let's say, a contrarian play. But we don't believe it's contrarian. We believe it's acting when others are afraid to act, because we're looking at the fundamentals from more than a year's standpoint. You don't day trade real estate. People who do that end up in big trouble. What we do is we look at buying the right properties in the right locations at the right prices. And today what we're seeing is we're able to buy properties at far lower than replacement cost. We're able to come in and buy some best-in-class assets in irreplaceable locations, and there's a much shallower bidder pool than there otherwise was if we're buying the assets on market. And if they're off market, we're able to negotiate some exceptional deals with property owners, because these property owners have the need to return some equity to their investors. And so we see this as a mismatch from the standpoint of you're able to buy very quality assets in an environment where we're only seeing construction cost increases. You have less buyers out there in the market, and sellers more willing to sell those assets because they need some of that money to return to their investors. And so for us, we think that's you buy when people are scared and you sell when people are greedy. And so it's an optimal environment for us to profit. So I've spoken at the IMN events for probably 15 years. Primarily this one in Laguna and the one in New York. And what I've found is that at the IMN events, I'm able to, I would say at this point, I'm able to see a lot of the people I don't otherwise see. And when you're seeing people year after year and you develop relationships with them, our business is the long game. Meaning, deals don't happen, you don't know per se when you're going to get together and do a transaction. But if you're consistently seeing these people and building those relationships, and it starts when you meet them here, that's where you're able to get a lot of deals done. I can tell you that from the relationships I've built at IMN, I would say from a pure financial standpoint, numerically, I would say in excess of $1.5 billion in deals we've done as a result of relationships that were originally fostered at these events. So hence why I continue to come back.